I'm Andrew Goddard, and this is the weekly Volatility Roundup from CMC Markets Connect. It was a mixed week for drinks giant Diageo, as despite earnings news showing a strong uptick in sales, and this being accompanied by a dividend increase, the underlying failed to make any sustained progress. 1 week vol on the stock stood at 46.7% against 24.38% for 3 months. After a strong finish to July, Chinese stocks paused for breath as the new trading month got underway. Whilst talk of stimulus measures from Beijing has served to boost sentiment of late, the market is perhaps going to look for evidence of this filtering through before aligning itself for another move higher. Concerns as to where the next regulatory intervention may come from, there's now talk of limiting smartphone usage for kids, is precisely the sort of news that could serve to cap gains, especially in the tech sector. The Hong Kong-China 8 shares equity index posted 1 week volatility of 36.31% against 30.21% for 3 months. Action for wheat prices remains volatile, although the overall trajectory is downward. That's showing confidence the coming months will see increased yields from the US and other markets absorb at least some of the impact of supply disruption from Ukraine. The grain continues to trade around levels seen when the Black Sea export deal expired, and that brief shock after Russian bombing of Ukrainian silos a few days ago has now been reversed. 1 week vol on wheat stood at 53.07% against 47.26% for 3 months. A key statement from the Reserve Bank of Australia ahead of the weekend break left the Aussie dollar looking volatile. Whilst there's an expectation that more rate hikes are still to be seen, policymakers seem to be hinting that the inflation battle is close to being won, although this has come at the cost of paring growth forecasts. 1 week vol on Aussie dollar stood at 11.44% against 10.3% on 3 months, whilst Aussie yen printed 12.36% on the week and 11.05% over 3 months. And finally, refined oil products remain an active trade. The extreme heatwave had been weighing on production capacity at US refineries, whilst demand is also seen as rising across the board. However, reports of a significant build in EIA gasoline stocks on Wednesday offered respite for price pressures. 1 week vol on RBOB gasoline printed 37.08% against 32.73% for 3 months.